On behalf of State Bank of India, a very warm welcome to the media representatives for joining us today. We are pleased to announce the State Bank of India's financial result for Q2 FY20. Sir, Chairman, State Bank of India, Managing Directors, Shri Ashwini Kumar Tiwari Sir, Shri Vinay M. Tonse Sir, Shri Rana Ashutosh Kumar Singh Sir, Deputy Managing Director Finance, Madam Saloni Narayan, other DMDs and other dignitaries to the conference. We appreciate your presence here at the conference today. We will now begin this media briefing. To do the honors, I request our Chairman Sir to address the media and shed light on the bank's financial performance for Q2 of FY25.
Thank you. Gentlemen, thank you for taking the time to join this meet today, post announcement of Q2 FY results of the bank. The results for the second quarter of FY22 highlight continuity, consistency, and SBI's significant long-term strengths. So at the outset, I would like to thank all the stakeholders for their support and helping us in creating sustainable value, not only for the bank, but also for the economy as a whole. Over the years, SBI has remained focused on strengthening the key components that contribute to this sustainable value. We have prioritized our liability franchise, refined our processes, continued to improve our underwriting standards, and aim to deliver value to all stakeholders while positioning ourselves as a reliable financial services brand. I will first start with a brief description of the present global and domestic economic scenario and then discuss bank's performance. Global growth is expected to remain stable, though somewhat underwhelming, with the cementing of growth in the largest economy of the US being a silver line. The recent US election results could lead to lower taxes, favorable regulations along with tighter labor markets. They also present an opportunity for the Indian economy to further strengthen the domestic manufacturing base while closely aligning with strategic allies. Further, any positive development on the geopolitical situation in areas of conflict could lead to easing of commodity prices. On the other hand, the EU bloc appears still shrouded in uncertainties. The global growth forecast by IMF for 2025 remains at 3.2%, with India remaining the fastest growing large economy. In domestic economy, India's GDP registered a growth of 6.7% in Q1 FY25, driven by private consumption and investment. Looking ahead, agriculture sector is expected to perform well on the back of above normal rainfall and robust reservoir levels, while manufacturing and services activities remain steady. On the demand side, healthy kharif sowing coupled with sustained momentum in consumer spending in the festival season augur well for private consumption. The average inflation for FY25 is expected to be 4.5% according to RBI estimates. Latest numbers show that scheduled commercial banks' deposit growth has now surpassed credit growth. Deposit credit differential has now turned positive, which was last seen in April 2022. We expect scheduled commercial bank deposits will grow 11 to 12% and credit by 12 to 13% in FY25. RBI has ensured that system liquidity remains comfortable by conducting two-way market operations. As far as our bank's results is concerned, we have once again delivered a good set of numbers. At the end of Q2 FY25, our credit growth was 14.93% year on year. Deposit growth was 9.13% year on year, while the CD ratio domestic is at around 67.87%. Importantly, our slippage ratio was 0.51%, with retail slippage ratio at 0.31%. Credit cost was 0.38% and PCR is all-time high of 75.66%. The profit for the current quarter is 18,331 crores, up almost by 28% year on year. As far as in the part of business growth, I would like to make a special mention of the deposit growth, which we've been very seriously pursuing. At the end of Q2 FY25, deposits have crossed a milestone of 50 trillion rupees. I think this is a milestone which we crossed, and we stand at 51.17 trillion. We serve more than 50 crore customers. We are humbled to serve 1 out of every 3 Indians, but I take pride in saying that SBI in some manner touch every Indian family. The total deposits have grown by 9.13% year on year to 51.17 trillion. Term deposits have grown by 12.51% in year on year. Our current account deposits have grown by 10.05% year on year. And CASA grown by 4.24%, and we have maintained CASA ratio at more than 40%. So this is a good deposit story in our view. As far as credit growth is concerned, I am pleased to advise that the credit growth continues to be robust across all segments. Our domestic advances have grown by 15.55% year on year, driven by 18.35% growth in corporate, 17% in agriculture, and another 17% in SME, and 12.32% in retail segments. Our foreign offices advances have grown by 11.56% year on year in rupee terms. As regards asset quality, slippage ratio, as I mentioned earlier, is 0.51%, while the credit cost for Q2 FY25 stood at 0.38%. The net NPA ratio improved by 11 basis points year on year, stands at 0.53%. We have a well-provided NPA book, as mentioned earlier, with a PCR of 75.66%. These indicators of asset quality highlight the robust quality of our loan portfolio. As far as liquidity is concerned, our liquidity position is comfortable, with the liquidity coverage ratio being about 129% as on 30th September, while the domestic CD ratio was at 67.87%, indicating a significant potential to grow our credit portfolio. The bank remains well capitalized, and we have sufficient headroom to take care of business growth requirements. Our capital adequacy ratio is at 13.76% without considering plowback of profits, and is well above the regulatory requirement. And if we include the profits for H1 FY25, our CAR would be at 14.79%. As in the digital journey, I am happy to share that the progress we are making in digital banking is paying dividends. More than 8 crore customers have been registered on YONO, driving digital agenda of the bank. 61% of regular saving bank accounts are opened through YONO in Q2 FY25. Our subsidiaries are also consistently performing well and continue to create significant value for all the stakeholders. We will nurture these subsidiaries and maintain leadership position in the respective businesses. We are glad to report that the bank continues to report ROA and ROE greater than 1% and 20% respectively at the end of half year FY 2025. While we are glad about the outcomes in Q2 FY25, we are also mindful of areas for further improvement. On the liability side, we continue to focus on increasing our share in current account while maintaining our leadership position in savings bank deposits by further strengthening our customer outreach and branch network. Although our bank's cost base is substantial, it highlights our commitment to compliance and establishment expenses. From this strong position, our goal is to be consistently achieve ROE over 15% throughout business cycles. To conclude, I want to thank you all once again for your support and being there here. The bank, while pursuing its own progress, contributes to the progress and growth of the economy. We remain committed to rewarding our stakeholders' trust in us with superior sustainable returns over the long term. My team and I are now open to taking a few questions. Thank you.
Thank you very much, sir. Now we move to the media question and answer. To ensure seamless flow of the session, we will be calling names from here. We request you to please restrict yourself to 2 questions focused on the results only. If time remaining, we may repeat this cycle. So we may start with Mr. Ankur Mishra from ET Now, please.
First of all, congratulations for the quarter. You have posted the highest net profit as far as all the companies are concerned. So on that front, although the bottom line looks better, but if we see the details of it, the interest expense per se has increased considerably around 16%. So I want to know, is there any impact in margins per se which you expect in the next 2 quarters or later down the line? And apart from that, I also want to know about the deposits. You have garnered good amount this time, as you mentioned. Do you see that repricing will come into effect?
I'll answer the first question, the second question first, Ankur. In terms of the deposits, I think there are quite a few initiatives what we have taken on the deposit front. And most important one is that we have galvanized the largest branch network what we have 22,500 branches. Every branch, every individual working for SBI are focused on the deposits, number one. Number two, as far as cost of deposit is concerned, while the year-on-year cost has gone up, if you see the quarter to quarter, while we have grown deposits, the impact is not much on the NIM. We just contained the cost to 3 basis points. So our effort is that how do we leverage the technology? How do we leverage our reach? And there are several initiatives what we have taken in terms of value-added services, new product launches, and premier banking services to ensure that high-quality customers are attracted to us. Just to give an example, on the strong savings bank franchise, we open almost 65,000 accounts a day. And we have acquired almost 10 lakh salary accounts during the year. And so that gives us, in case of corporate salary package account, the average balance is about 1.10 lakhs, which means that the highly funded savings bank accounts are being attracted. And earlier also I mentioned in another context that on the deposit front, we would like to compete on the quality of customer service, not on increasing the deposit rates, while we adequately compensate our customers in terms of interest rate. So the first question is in terms of
in terms of the interest expenses and overall, I mean, the other income is what looking like.
So other
increased.
income, obviously, I think our focus on non-interest income has paid off. Non-interest income in a bank like ours comes from two sources. One is the recoveries from the return of accounts. And I think that part we have done very well. And going forward, we are hopeful that the same run rate will be continued on the recoveries in return of accounts as well as recoveries in the NPA accounts. The other one, of course, is also aided by the treasury income. And our model of managing our treasury in terms of booking the trading profits, adding some more duration to ensure that we will make profits on a moment of yields, that has paid off very well. So non-interest income continues to be our focus area. Thank you.
Next question is from Anjali from Business Standard. Pass it on. Sorry, next question we'll take it from Piyush from Hindu Business Line.
Good afternoon. Sir, what is the update on, is there a plan for you to offload stake in Yes Bank in H2? You have also reduced some stake in Jio Payments Bank. Would you continue to moderate that stake? And if I could add just one thing, NPAs are lower, slippage rate is lower, but provisions have slightly increased by 1,000 odd crores Q on Q. So why higher provisions? Thanks.
So the higher provisions are essentially aging provisions when the account becomes substandard and moved to D1 or D2. So these provisions are essentially coming from the aging part. As far as two entities, what you mentioned, I think I know as much as you know in the newspapers. So nothing much is progressing on that, and I have nothing more to add there. We at the appropriate time, we would definitely let you know. Without your knowledge, we will not be able to go ahead anyway.
Next question is from Shipra from The Informist.
Hi, sir. Just wanted to understand how is the microfinance book looking right now? Are you continue to see stress there? And the second is if the cost of deposits you think have peaked, and then how do you see that going forward? Just one last question. In quarterly, your deposit growth has been higher as compared to your loan growth. So any target on maybe on loan growth and deposit growth for the rest of the financial year? Thank you.
So as far as loan growth is concerned, I think we still hold our guidance that our growth rate would be 14 to 16%. I think that is what we are holding on to. On the deposit growth, I would like to be in double digit. While we are in the term deposits and the double digit, I think overall deposit growth rate we would like to move. We are close to that, and hopefully we will be entering the double digit deposit growth rate. And as far as deposit rates are concerned, I broadly believe that they have peaked. And most of the banks, if you have noticed the results announced, including SBI, that we try to contain the cost of deposits, and by moving away from the bulk deposits and focusing on the savings bank and current account. And within that, again, retail term deposits, which are sticky, and also while adequate compensation is given, but I think it's not very expensive. We want to contain there. What is the first question you asked, ma'am?
The microfinance book.
On the microfinance fund, see, in the overall NBFC book, our microfinance exposure is very minuscule. And if you see the overall advances book, it is even very, very, very small portion. And if I remember correctly, I think it's about 10 to 11,000 crores in a book of 39 lakh crores. So even within the NBFCs, if you say 3.6 to 3.7 lakh crores our NBFC book, I mean services, out of which 10,000 crores is not a big amount. And we are not mightily worried about. You want to add something?
I'm just saying that this book is holding up so far. So there may be individual stresses within that portfolio, but it's not reflected in the overall any company as such.
Yeah, one is it's a relatively smaller book, and among the exposures also we don't see any unusual trend.
Next question we have from Anupreksha from Financial Express.
Hello. Hi, sir. So corporate book has witnessed robust growth. So just wanted to know what's the guidance going ahead. And secondly, FM has reiterated several times that banks should focus on retail lending, especially she meant in terms of project finance and infra loans. So what's your opinion, that should banks restrict to retail lending only, or what's the view on this?
So on the corporate book growth rate, I think we have a good visibility of corporate book, both in terms of the proposals under sanction as well as sanctions but not disbursed. Is almost 6 lakh crore book which is there. Visibility of corporate credit growth is definitely there. I think we expect this 17 to 18% growth rate to continue. But as I said, I think as of overall credit growth, we would be looking at 14 to 16%. As far as banks lending to corporates, I think the biggest advantage for SBI is that we have several, I always believe in saying this and like to say this, that we have several swim lanes, right? We have retail, we have agriculture, we have MSME, we have corporate. Within the corporate, we have working capital, and we are the largest working capital lenders to corporates, and a bit of project financing. I think all these swim lanes are available to us, and depending on the opportunities available, we lend. And also, I think FM's view is in terms of asset liability mismatches, as long as they are not breached. I think large banks like State Bank of India probably have to participate in the project financing.
Next question is from Vishwanath Nair from NDTV Profit.
Hi, sir. A couple of questions. The first one with regard to the general commentary around middle class supposedly shrinking, and that while demand in your upper band and lower band are still okay, the middle urban is really suffering, is what your FMCG companies are telling you. Is this something that, as a view, do you endorse this? First. And the second one, you talked about 6 lakh crore worth of sanctioned pipeline for corporate loans, 17 to 18%. So does that mean your retail will continue to grow at this 12 odd percent? To average out at about 14% at the end of the year. And specifically in retail, what is not probably not growing as fast as it was before?
So in terms of the stress among the borrowers, we don't witness in our book because of the quality of the book what we built. I think our book in all retail personal is incredibly different from the industry. Let me tell you, I don't want to use the word, but I would like to use it. Because see, despite whatever is happening in the several segments of the society, our home loan NPS are the lowest in the industry, 0.79%. And these are not very high level home loans. Our average ticket of home loans is 41 lakhs. Which means that these are segments of the people, middle class, upper middle class. We have large amount of affordable class also. But what is differentiating us from others is in terms of our qualitative underwriting. I think this is a focus which will continue in the retail. And as far as what is the segment which is not growing, essentially is the unsecured personal loans. I think the demand is lower. While we have time and again stated that our unsecured loan portfolio, which is our flagship product, Express Credit, our pension loans, are 95% to the salaried class, where the salary is actually received by us. So which means that this portfolio continues to be robust in terms of the asset quality. If you see the numbers, we are just about less than 1%. The 1% is basically it is rounding off. But otherwise, this portfolio, the retail personal portfolio, whether home loans, express credit, auto loans, always stood the test of the times. We have maintained the asset quality during COVID time. We are maintaining the asset quality when people are talking about us unsecured personal loan or retail personal is going through difficult times. So we would like to reiterate that asset quality issues are not there in our retail personal. And the growth probably would be slower in terms of unsecured personal loan, not because we don't want to lend, because they're all high quality consumers what we have. It is because of the demand. And we are seeing in the month of October, where the festival season is beginning, that the growth is coming back.
At the end of the fiscal year, you're not still growing above 14%?
No, that is a guidance. 14 to 16% is our guidance.
That's overall. I'm talking about retail.
Overall.
I'm talking about retail specifically. You're not really crossing 14%.
Retail. See, the home loan is almost 14%. It is only the unsecured express credit which is slightly lower. Probably it will come back to the normal levels.
Next question is from Siddhi from Reuters.
Hi, sir. My first question is on your deposit growth. Right now it's at around 9%, and I guess the guidance that you had given a few quarters back was about 12 to 13%. I want to understand, does this guidance still hold given the current environment for deposits, the war for deposits, etc.? Do you think that guidance holds, or do you think it needs to be trimmed down? That's my first question.
The guidance holds for double-digit growth, starting from 10%.
So 12 to 13, is that achievable right now at this stage?
We are endeavoring towards that 12 to 13%, but I think it will probably will not be able to reach in FY25. The effort is to have at least 10 to 11% deposit. And also you must understand, while we have given the guidance in a different context, the base is tremendous in terms of SBI, and a 10% growth on 51 lakhs is about 5 lakh growth. The effort and the intensity of efforts on the deposit mobilization gives me confidence that we will definitely will be in the double digit, if not on 13%.
Okay. So any guidance on the NIM front as well? We've seen some contraction, both YOY and QOQ. If you could give some sense about how that NIM is going to pan out for FY25.
I think broadly the compression is contained. If you see the QR quarter to quarter is just about 4 basis points. And we think that it is more or less stabilized for 2 reasons. One is the deposit rates are also peaked, and our focus on the CASA paid off. We have witnessed good growth in the current accounts. And we have had 2 increases in MCLRs, which were effected sometime during September, right? So which will give the yield uptick sometime during this half year. So that gives confidence that I think we will be holding up the NIM. Not a very significant moment there.
Next question is from Ekta of Z Business.
गुड आफ्टरनून सर। सर अभी हमने स्पीच की शुरुआत में सुना कि यूएस में इलेक्शंस के रिजल्ट्स का आप असर ब्याज दरों पर भी देख रहे हैं, तो एक कंज्यूमर कब तक एक्सपेक्ट कर सकता है कि लोन लेना सस्ता होगा, और एफडी पर भी जो आप ब्याज दे रहे हैं क्या उसे भी कब तक हम कम होता देख सकते हैं? और दूसरा ये कि हम डिपॉजिट्स में ग्रोथ देख रहे हैं और आप बार बार इस पे इन्हांस कर रहे हैं कि कस्टमर सर्विस की वजह से ही आपने इसमें बहुत बड़ी ग्रोथ देखी है। किस तरह का आपने बदलाव किया है इस कस्टमर सर्विस में जो आपने ये ग्रोथ देखी है डिपॉजिट्स में?
So इसमें I will answer both in English and Hindi.
Whichever language you're comfortable with.
So here I mentioned something about value-added services. Lot of times what happens, many of the services are either not known to the customer, where the services are available. Like for example, our salary package customers get host of benefits, but they may not be aware that those benefits are available. That is one thing which we are, making them aware in terms of availability of those services. Number 2, we also have introduced a large-scale doorstep banking services, which is essentially aimed at both Divyangjan as well as the elderly people. And most of the times we are making these services available at no cost basis for these 2 categories of people. And if anybody else wants, I think a small fee is charged. I think that is also well appreciated in terms of the doorstep banking. A few other initiatives, what I mentioned in terms of the premier banking, where a lot of value-added service in terms of the launch access and many other things are made available. And even a specialized relationship manager is going to be made available to these premier banking customers. And we also are planning to launch a special product for women and a special product for the senior citizens. And these are a few initiatives, and more importantly, today the quality of service at the outlets has tremendously improved, and everybody is focusing on the deposits and deposit growth. These initiatives are definitely likely to help us. And as far as interest rate is concerned, I think our house view is that the first rate cut probably will happen only in February. Which means that till that time both depositors will continue to have the rate of interest what we have currently without any reduction. And in terms of the retail loan customers, I think they may have to wait up to February.
Next question is from Anurag Shah of ET Now Swadesh.
नमस्ते सर। सर अभी आपने अपने एड्रेस में बताया था कि जो सब्सिडरीज़ है वो काफ़ी अच्छा कर रही है और उसमें वैल्यू क्रिएशन वैल्यू के बारे में आप देखेंगे, तो आपकी जो एएमसी कंपनी है उसमें अभी 10 लाख करोड़ का हमने देखा AUM रीच हुआ, और वो उसका जो अनलिस्टेड शेयर है जो अलग अलग प्लेटफॉर्म पे अवेलेबल है उसकी काफ़ी ज़बरदस्त डिमांड है और पिछले कुछ महीनों में कई मैनी फोल्ड वो हो गया है। तो ये हमने जब भी देखा है जब कंपनी कोई IPO की तैयारी कर रही है तो AUM का आपने 10 लाख करोड़ का सेलिब्रेशन देखा, तो क्या IPO का भी सेलिब्रेशन आने वाले वक्त में तैयार कर रहे हैं आप, किस तरह की स्ट्रेटजी? और दूसरा सवाल सर, आप ही की सब्सिडरी SBI जनरल का भी आपका था लिस्टिंग का प्लान को लेके, तो अब सरकार कह रही है कि हम कंपोजिट लाइसेंस लेके आ रहे हैं जहां पर लाइफ की कंपनियां नॉन लाइफ प्रोडक्ट बेच पाएगी, नॉन लाइफ वाली लाइफ भी। तो अभी एक आपकी लाइफ की कंपनी है ये, तो वो SBI जनरल का लिस्टिंग का प्लान भी उसी तरह से रहेगा?
As far as composite license is concerned, we have no plans to have any composite license. We believe that we have two strong entities in operating in two specific areas of life insurance and general insurance. There is no such plan of having any composite license in either of the companies. As far as listing is concerned, I think earlier also we stated that the objective of any divestment or listing is based on the needs of the capital of the subsidiaries. Obviously, we would like to have value discovery in a proper manner, not on the various platforms what you've spoken about. But I think time is not yet come there, and we have no immediate plans of listing. Would you like to supplement?
So, as rightly said, no immediate plans for both these companies you talked about, because two reasons. One is, as sir said, about capital requirement. The other reason, हिंदी में बता देता हूँ आपको. दूसरा रीज़न ये है कि हर कंपनी में एक वैल्यूएशन की एक्सपेक्टेशन है हमारी, कि वहाँ पे पहुँचने के बाद ही हम उसको डिसइन्वेस्ट करेंगे. तो दूसरी कंपनी की जो आप बात कर रहे हैं, वहाँ पे हमारे हिसाब से भी वो वैल्यूएशन नहीं पहुँची है. तो ये वजह है दोनों में कि हम अभी डिसइन्वेस्टमेंट की बात इमीडिएटली नहीं सोच रहे हैं, और आगे ऑफ कोर्स डिपेंडिंग ऑन नीड देखेंगे इसको.
Thank you, sir.
Next question is from Pratik of PTI.
Hello, sir. So my first question is that do you have any branch opening targets for the FY25 and any update on wealth management side? The second question is that if you are planning to have a special product for women and senior citizens, what kind of services you want to give?
So as far as branch expansion is concerned, we have announced that around 600 branches will be opened during the current financial year. We have done extensive micro market study where to set up these branches. While we have some obligatory unbanked areas where the branches have to be opened as per the Government of India guidelines, we realized that in many of the upcoming residential colonies and all, where there is a good potential for business, our presence is not there. So we did an extensive market study, and we have identified the locations. Out of this 600, more than 530 approvals have already been given to our circle management. We operate through 17 circles, you are familiar with that. So I think we are on track there. I think out of this 550, if I know, around 130 branches are already operational in the current financial year, 135. So we will be able to achieve the targets. Maybe there is some small spillover, because much of the branch opening is a process where you have to identify the center, identify the place, identify the property, and staff them. Hopefully, we will have better progress in the second half. And as I said, we have already given the approvals to our people on the field. They're looking for opening the branches. Would you like to supplement on the special products?
Yeah, on the wealth, one of the initiatives which we had taken up early this year and which is taking up very strongly is we are having a sort of a differentiation in the wealth itself. We call it the premier banking for the lower side of the wealth platform. And we have also revamped the wealth platform itself as in the IT part. So that way we are seeing a very strong pickup. And we want to build this wealth as a very, very strong franchise. And it is turning out to be. Maybe in the next few months, we will see the benefits of the entire revamping which we have done.
Next question is from Yatin of CNBC Awas.
हेलो सर, बहुत बहुत धन्यवाद अपॉर्चुनिटी के लिए. Sir, when it comes to agri slippages, it was elevated in Q1, and with your disbursements growing and reservoir levels because of good monsoons being at record levels, do you think agri slippage and overall agri book should improve in second half? And talking about capital, your capital adequacy ratio is now below 14%. However, you have said that you don't require capital as such. But do you think in the next 2 to 4 quarters you could access the equity markets for capital raise? Is there a possibility to boost your capital adequacy ratio? Because you have been talking about double-digit advances growth, and your corporate book also looks quite strong. So these two questions.
So on the capital adequacy front, as I mentioned, I think current CRAR allows us almost 6 trillion credit growth can be supported, and if you add back the profits, which we don't do now, we can even support by the end of the year about 10 trillion credit growth, which means that the capital ratio or capital adequacy is not a constraint for growth. But having said that, if there is a requirement of improving our common equity or this thing, we will definitely examine. At this juncture, there is nothing on the cards. No timeline is defined on that. As far as agriculture slippages, I believe that both in terms of see, in the first 2 quarters, what we noticed, particularly in the second quarter, which is the Kharif season, we could have had a better performance while we had a good performance in the disbursements. We found that the high rainfall in certain areas, flooding and all, has impacted the recovery efforts, and much of the recovery in agriculture is about renewing the crop loan. That could not be done in Kharif. As you mentioned, the reservoir levels which will support the Rabi growth, we see that the slippages probably would be contained, and the upgrades will be significantly higher.
If I may just add one point there, particularly on the agriculture, the slippages from Q2 over Q1, we have seen a 40% reduction. So I think that itself shows that things are picking up.
Thank you.
And we are even better in the Q3, whatever we have seen.
Next question is from Shayan of Mint.
Hi, sir. The Supreme Court ordered liquidation of Jet. Go might suffer a similar fate going with the court proceedings. Does it seem like an airline cannot be revived? And would that also, impact your decision on lending to the sector here on? The first question. Second is on gold loans. What is your outlook on gold loans? There's been a lot of discussion. I mean, the RBI has come out with some circulars. So what is your outlook on gold loans? That's the second question.
So on the airlines, of course, not many airlines left now to be funded. So, but we have funded airlines based on the ownership, not necessarily on the operational parameters of the airlines. Of course, they are important for the credit underwriting point of view. So I don't think we will be taking any big bets on airline industry going forward. And the second part in terms of what is that?
Gold loans.
Gold loans. I think the gold loan guidelines of RBI had brought greater semblance to this industry. While the bank-led gold loans, broadly are well managed. I think there were some concerns in terms of the NBFCs led gold loan lending, and these brought a lot more clarity in terms of what actions have to be taken, what are the risk management practices which needed to be followed. In fact, we did a quick gap analysis in terms of RBI guidelines and our own internal practices. We were very happy to see that we are almost fully compliant with the guidelines proposed. So the gold loan has a good potential. We've been pursuing this gold loan using our network. Many branches in the non-conventional gold loan areas or non-traditional gold loan areas also have been showing good growth in terms of the gold loan. And I think gold loan per se provides an immediate liquidity to the people who want it. If it is managed well, it's a very good product. I think that's our view.
Next question is from Gopika of Mint.
So the SMA-1 accounts have seen a spike this quarter compared to the last quarter. Where is this stress that you're seeing? Also, secondly, on co-lending, what is SBI's outlook or strategy? Would you look at growing this book? And thirdly, I know your predecessor was, goal was, 1 trillion profit. Are there some 3 to 5 focus areas for you under your tenure?
SMA-1, there's a temporary blip. I think we have given the note also. There's one account which was in SMA-1 category which has been pulled back. I don't think there is any concern in terms of SMAs there, whether it is in corporate or in other books. As far as co-lending is concerned, we believe that co-lending is a good platform, but we would like to use co-lending mainly for the PSL purposes. We have never used co-lending model for non-PSL. We will continue to do that. I think wherever and whichever partnership gives us access to the PSL, we will pursue that. And we also believe that the co-lending, especially when you are doing in PSL, very small value loans, has to be a platform-based approach. If we have gone slow on co-lending only because we took some time to put the platform in place. Today we have the technology platform in place, and we have partnerships in place, and we also have agreed upon certain parameters. We know that we can't simply ask the bank parameters to be adopted by them. So all those areas have been sorted out now, and I think there is a good potential to increase this co-lending activity within the bank. The third point which you mentioned, 1 trillion net profit, is of course our dream. It is not about 1 trillion profit. We would like to be the first company to achieve 1 trillion profit in the country, and we will definitely pursue that objective. And the first stage is of course 1 trillion operating profit. Without being forward looking or forward guidance, I think we strongly believe that we have the potential to reach there. Timeline is something which we need to look at. The first priority is to reach 1 trillion operating profit. I think we are almost there, right? 93,000 crores. So I think that's achievable.
Next question is from Lalitendu Mishra of Hindu.
Hi, sir. To supplement Sayan's question, what is your view about the Supreme Court judgment on the Jet Airways case, and how much money the bankers are likely to get from the liquidation of this airline? And my second question is, what do you attribute the 28% profit growth this quarter? Thank you.
On the Jet Airways, I don't think there is any view to be given. I think the Supreme Court has been categorical in terms of this case, and very clear direction to the lenders, COC, and the NCLT. I think there's nothing much we need to really talk about. And as far as recovery is concerned, we don't talk about the individual accounts. I think we'll keep it that way. In the profit, I think it has been both in terms of the containing the operating expenses and increase both operating income, which is a component of interest income as well as non-interest income. And operating expenses, as we said, I think last half year we've had the spike in the employee costs, and that have been evened out now, and that is definitely a big contribution which has come from there. And we have tried to reduce and contain the operational expenses also in terms of the interest costs, and we try to move the needle on the yield on advances, however small it is. I think directionally we are focusing on increasing our core interest income and renewed focus on the non-interest income and containing the operational expenses by bringing the operational efficiencies are going to be the way forward for us. Any of you would like to say something?
I think that's
okay. Right.
Good afternoon. This is Abhijit Lili. One is with regard to the recoveries that you made reference to. How much has been the recoveries from the return of accounts or NPA in Q2 and comparable last year? Because in the pre-statement, I didn't see that. That was one question. Second is with regard to your, you already informed the exchanges also about your retail bond plan of 20,000 crore. If you could give that some commentary on that.
The bonds, issuance of new set of bonds, yes.
Yes, you have just given a board approval. So
yes, we got the board approval. This board approval is just now, today itself we got up for 20,000 crores infrastructure bonds. This is mainly for infra-related bonds, and we have very significant infrastructure book, and there is a good amount of interest among the investors for this particular instrument, and we would like to access the market, and we would be coming out with this 20,000 crores issuance.
Is it the cost there in comparative terms? It is cost beneficial vis-a-vis the deposit that is driving you. Do you have a infrastructure loan book to become eligible? That I understand.
Yeah.
But the second part, that is vis-a-vis the deposit cost, this is still much more gainful given the 100% deployment and all other things.
On the liabilities side, I think we always explore, various options. And we have been accessing the CD market, we have been accessing the tier 2 bond market, and we have been accessing the infrastructure bond. And obviously, infrastructure bonds have certain advantage in terms of the CRR, SLR exemptions, and is a very good instrument, especially when we have already the infrastructure book available to us, and cost effective also. I think we have been consistently getting a good price in the market. I think in compared to other institutions, we are able to get tighter pricing on that. It makes sense both from the efficiency of liability as an instrument there, as well as from a pricing point of view.
One is about, in February, you said that there could be a repo rate, policy repo rate cut. So you are in your NIMs, you are also factoring in a certain impact of the cut because of the external benchmark. So currently, what kind of a impact it could bring in, assuming the 25 basis point?
Repo definitely will have some impact because most of the loans will have external benchmark linkage. But in our book, 42% of our book is MCLR linked, which will take some time to reprice, and it is based mostly on the cost of deposit or cost of resources. So the impact will be less, number one. Number two, on the MCLR book also, as I said, we have had two enhancements, two increases in the last 1 month, three enhancements, and which will help us to partially offset in case if any rate movement is there. But our view is that one is the rate cut is a little far away, and even if it happens, it will be relatively smaller rate cut. So I think we will be able to protect the margins. You also asked something about the recoveries and return of accounts. For the quarter Q2, we had 2,336 crores.
Compared with last year?
It was 1,566.
Will be able to maintain the same tempo of 2,300?
Yes.
And one last is about, again, coming back to infrastructure band. You are going to hawk it to the retail. How challenging it would be?
No, this is not retail.
It
Is
talks
that?
about retail.
No, this is not retail.
No.
Next question is from Ashish of PTI.
So on the corporate loan side, book growth side, how much of it do you expect on the CapEx side, the greenfield, brownfield? What is in the 6 trillion pipeline? How much of it would be CapEx led, and how much of it would be the working capital? Assuming that working capital continues to be really elevated and CapEx might be a bit slower, so you have CapEx being slower, you have retail also trending below the bank average. So what does this portend from a future perspective, medium-term perspective there? Also, sir, second question, there is quite a bit of promises on loan waivers and others. I do note MFI exposures being broadly working for the bank, but as a leading bank, what do you make of these things? There are other lenders who are probably struggling, probably reporting higher stress. Compounding the problem would be these announcements. How do you look at those?
You want to answer on the corporate book?
So what I would say on the corporate side is, one is that well, I don't know how you came to the conclusion that CapEx is not happening. We are seeing good opportunities there. And as Chairman had earlier explained, that because of the project finance speciality that we have in terms of a strategic business unit, so we have certain advantages, and that's why we continue to get good quality projects and we assess them. underwriting quality and selection is extremely important that we continue to do. So therefore, we see a lot of opportunities in CapEx as well as OpEx, because if CapEx happens, the OpEx or working capital will follow in most projects. That's as far as the corporate side is concerned. So,
Other ones on the retail side, I think I would like to correct that while we have had 12.3% growth in the retail side, we are witnessing a renewed retail growth as we speak, which means that the average growth which we are projecting for 14 to 16 would definitely happen in the retail also. So I think it's not going to be a constraint on that. As far as loan waivers is concerned, we don't see much of an impact there. Currently, as we mentioned, our MFI book is very small and we don't see any second order impact of any such defaults.
Next question is from Hamsini of Money Control.
Hi. A couple of questions. One, you are at a CD ratio comfortably above 60%. So why do you even have to chase deposits? Is it because if SBI stops on that, then other banks will not be aggressive on deposits, and therefore, being the market leader, you have a nudge to do it? Is it something that you've taken on yourself as a responsibility to ensure that deposit drive is there in the system?
So I think in the past also we said that deposits is all about franchise. You have a franchise, you have a market share to protect, number one. Number two, that we would like to have an incremental support which is going to be given to the credit growth from the deposits, right? So if you see our incremental CD ratio, it's just about 100%. That means, we would like to fund this incremental credit growth coming from the incremental deposits. So that is one. And number two, we have 50 crore customers and we do not want to say that we don't want to take deposits. I just want to take back 3 years ago when the COVID was there. The whole banking system was not taking up the deposits. But SBI continued to accept the deposits. So, and we found ways of deploying that money also. We did rupee dollar swaps and encouraged our foreign officers where they were borrowing from the market to replace this borrowing with the rupee dollar swaps. So our effort is in terms of maintaining our market lead, number one. Number two is that the deposits as a primary liability franchise need to be continued. Number three, I think we want to finance incremental credit growth, and also I'm telling you, as we have to build the buffers of deposits. It's not that, this is not on tap. The deposit it's not a market borrowing that, I just access the market and raise. The deposits have to be continuously, we have to be in the market. I think that makes us to pursue this with passion.
Thank you. The other thing is that some of your peers in the PSU space on vehicle loans, personal loans, etc., they are promoting more of fixed rate products, especially on cars, two-wheelers, where they're giving much attractive loan rates versus EBLR rates. And this I would see is a hedge on interest rate cut, if it should happen in February or whenever. Are you at SBI doing something like that in order to protect your margins at the moment?
So we are working on some products on the fixed rate basis and give some attractive rate. It should be useful to the customer also, right? So if he is choosing a fixed rate, he should get lower than the floating rate, and our margins are also protected. All our unsecured personal loans are on the fixed rate basis. It's not a floating rate basis. So we are evaluating what is those products which are not regulatorily mandated to be given on the floating rate, whether we can move to the fixed rate.
One last question, sir. Among all the subdivisions of corporate loan, one of the segments caught my attention a lot. Telecom space, you've declined in terms of your loan outstanding. You're also the largest lender to one of the telecom operators, which is sort of in trouble. Should there be any correlation between the two? Why exactly did this book fall?
There's no correlation as such, but there are other telecom companies banking with us, and they have money and are paying also. So obviously it's coming down. I don't think there is any correlation. It's a normal repayments which are happening in the existing exposures.
Would you participate in a I assume TV is over for the telecom operator that we're talking about. Would you participate in the 35,000 crore that they are looking at raising from bank loans?
I just want to repeat that I would not want to talk about individual accounts.
Thank you.
Yeah.
Next question is from Preeti of Bloomberg.
Hello, sir. So I have a couple of questions. One was you said that the demand for retail loans had reduced. You're seeing an uptick. Just want to understand why you think that reduced and why is there an uptick? Is it only because of the festive season? The second was on Premier Banking, and you said that you were focused on that on the lower end. So I just want to sort of understand the ticket size or the investable assets that you're looking at and you're focusing your attention on. And I know I'll add a third, but it caught my attention because when we walked in, there was a video playing of, I think, for fraud. And so apart from such videos where you're reaching out to customers to control fraud, how else are you using technology or your branches to really increase customer awareness? Thank you.
Yeah. I would like to answer the last one first. I think on the digital fraud and digital awareness, we are spending a lot of energy and time to ensure that our customers don't fall prey for this. We have one of the largest social media campaign which is running on the this prevention of cyber frauds. And let me also tell you that we are using extensively the AI/ML in the preventive risk management. The PRM, what we call, I think that is today almost all the channels are integrated with our PRM cell on a real-time basis. Some of the transactions are monitored on the real-time basis. If any suspicious transactions are happening, our PRM agents are able to reach out to the customer to prevent them doing the transaction. And there are quite a few interesting stories on how our PRM agents were able to stop the fraudsters, defrauding our customers. So that will continue. I think we are using all multimedia channels, press, print, and our own branches to create this awareness among the customers. And as far as Premier Banking, I would request Mr. Vinay Tonse to respond.
Yeah, I think there was another question also on the demand, right? What we are seeing as pickup. For me, it's just the classical and traditional Indian, the slack season and the busy season playing out. Exactly typical copybook style. So till September, it's not that we were very low. It was more than 10% even then. Now, after October, in October we have seen a fairly, I do not want to delve into the figures there, but it's a much, much better, and it's coinciding with the busy season. Question number 2 was on the Premier Banking, right? So we are looking at a pocket of 30 to 50 lakhs in this, of the value.
The total relationship value.
The relationship value. You could also look at it as investable money, but then we are looking at it from the TRV angle.
Next question is from Rosebud of Economic Times.
Good afternoon, sir. Hi. So my first set of questions is based on deposits. SBI has many deposit schemes. SBI has many deposit schemes varying from like 444 days, 400 days. And there was also a green rupee term deposit. So of the total deposits, what's the percentage garnered from these schemes? And how was the demand for this green rupee term deposit that you saw?
Green rupee term deposits are not attracting much attention. I think both customer awareness has to be created. If customer has to take a lower rate of interest, probably they are not ready for that. And if you are not pricing differently the green term deposit, and there is no differentiation at all. While we are trying to still promote, I think youth and youngsters would like to be part of it, but there is not much traction there. As far as 444 days deposit, I think it had garnered a significant amount of mobilization of deposits. I think more than 400, I think 444 days deposit, Amrit Vrishti, what we call. This campaign has really caught up well. And this campaign has mobilized a good amount of term deposits for us.
Thank you. My second question is on LCR. You have an LCR of 129%, and we're expecting a revised circular on LCR also, which will effectively increase the percentage by around 2 to 2.5%, if I'm right. So after this circular is out and in the industry, will you be reducing your LCR exposure? Or if not, then why?
No. See, we'll have to wait for the final directions to come in there. It's too early to talk about what is the impact. But our board and our ALCO, our internal approach towards LCR is that a large bank like ours should have minimum 120% LCR. We will endeavor to have that LCR of 120%. But we'll see how the final circular plays out and mandatory is 100%. We will be comfortably above that.
We will take the second last question from Ms. Sangeeta Mehta of Economic Times.
Hello, sir. So, you have always maintained in the past and even today that you would want to maintain consistency in performance. And today's results is also a stellar performance. I think yours is the highest quarterly profit among the listed companies. So would you be able to maintain 28% growth coming quarters?
So our endeavor, it's not about 28% growth. I think the growth would be lesser based on the base impact. But we would like to maintain in absolute terms this kind of growth, and there are, I think, various levers in place to ensure that this consistency is maintained, both in terms of the credit growth and deposit growth and cost of containing the operations, and our digitalization, optimization of the operational expenses. Everything indicates that I think we should be able to maintain this level, this run rate.
So the other thing is that RBI, the way they are now looking at banks, their approach is more on compliance, and they've been insisting on that. How has SBI, being the leader in the banking segment, how have you all changed your practices, or has SBI looked at things differently in the last 1 year?
Yeah, I think we have done quite a lot of things on the compliance front. One is, of course, first of all, we invested heavily into educating our staff in terms of the compliance culture. I think tone at the top, compliance culture have been drilled down to the field level, number one. Number two, probably we will be the largest bank in the country, largest vertical on the compliance which we have created, right up to the regional office level. Just to give an idea, we have more than 530 regional offices. Right? Today, all the regional offices have a specialized compliance and risk officer sitting in there. So, apart from ensuring that the compliance at the branch level is ensured, the oversight and compliance also is intensified, and the vertical directly reports to the group compliance officer without reporting to the business units. It's a huge shift in our approach towards compliance which has happened. Number two, we keep saying that we operate in 29 different countries, probably the only Indian bank which has got such a significant overseas presence. And we have seen all types of regulators, and more than 29 regulators we deal with. And the best practices, what we have seen in those countries, we are trying to bring in here. And I think in that sense, I think SBI compliant approach is world class. There are challenges of scale we are trying to address by adopting a large scale technology in terms of both on the RegTech, in terms of reporting, and also in terms of the getting any activity which is done by our people, getting it first time right, so that the compliance issues don't come into picture.
We will take the last question from Mr. Mayur Shetty of Times of India.
Thank you, sir. You said that rates have peaked and you're expecting a rate cut in February. So, and you also have a very large investment book. So, when do you see an opportunity to book treasury profits? And secondly, have you all taken any decision on the stake in the Jio Payments Bank?
Jio Payments Bank, we have not taken stake, call it on that. As far as the treasury is concerned, we have trading profits. We started making trading profits, if that is what we are looking at. See, our treasury gains this quarter included both trading profits as well as MTM gains. So, is that what you are asking or anything else?
Yes, I mean,
yeah, future rate cut also, I think our treasury is definitely working in terms of how do we build the book. In fact, we are acquiring duration to just take advantage of any such ill moment.
Yeah, thank you very much.
You want to add? Once again.
Mayur, I think that has been answered adequately. But otherwise, our team is well geared up to, if at all, and when it happens, we are ready to book profits also. But that is not really a priority for us. If we can hold it and nurture the portfolio for some more time, we will definitely do that.
Yeah, that's all. Thank you very much. Thank you all for joining us today. Thank you, Chairman of the press team. Thank you very much.
If you like the video, do like, comment, share and subscribe.